Hello, traders. Dale Pinkert here with TradeGate Hub. Talk about Black Fridays. Huh? Quite a day. Quite a day. I know, if I just show this action to the downside and when they release this news, the WHO, I wonder if the WHO is a pinball wizard, but there's supposed to be COVID wizards. Anyway, that was a bombshell on Friday. Took everything down. In fact, something manifested I'd been talking about for a while in WTI. Here was the top, and I had this speed line drawn for about a month now, and the 200-day moving average. So that was my target, was low 70s in here. Took it out by a little bit and stabilizing today. So it's possible we could be completing something here. After a market's in a car wreck, it's almost like what happens to people who are in shock. And at times you have to just let some time pass and let these big candles, as you can see, I mean, that's the biggest candle we've had in a while in WTI. Look at the end, look at the candle we had there compared to candles all the way back. So it's almost like the character of the market has changed, or like, it was a little bit of a shock to the market, what happened Friday, because it disturbed the trend. You had a lot of fear in here. But now what we have to do is dissect it, maybe not be as macro and be more tactical right now while the picture clears up and you let the dust settle, because it was definitely a dramatic day, and it came when most people weren't paying attention. And in fact, you know what? On the oil, here, I'll show you guys. I'm not perfect. So, I made a lot of the tough money from here to here and actually covered on this candle here, and then actually put out long calls for this bounce that we had. And so here it is Wednesday, and crude is hanging up towards 79 and up here. And I said, well, I'm just going to relax this weekend and take a little break, and I'll short it at $80 on Monday. Well, you know what this teaches me, and I've had to learn this lesson many times. And to be there for the good times, you have to be there all the time. Now, that doesn't mean that you have to be in front of your screen all the time. But if you have a bias and an objective that hasn't been achieved yet, you should still always have a piece on. So, do what I say, not what I do sometimes. So this all happened in one day, windfall profits, instead of grinding it out, could have had what took me weeks to accumulate in overnight. But who knew? And that's the point. To be there for the good times, hold partial positions. If you're, it's being confirmed. So you have at least a piece on, maybe not a full position, but you're there for it. So anyway, learn from my mistakes. It's part of what we do here. Maybe you'll be better at doing it than I am. And, I could still teach it. In fact, I teach a lot of my methods, and then see people that I teach these methods outperform me in the market, which, is great. I really am not in competition with mentees. To me, it's rewarding to see people that I've shared some of the things I use in the market and see them do it better than me. And, that's because maybe they have better psychology, different paradigm than me, on the patient side, on the conviction side, being able to sit for longer term holds. So, everyone has their own paradigm. So a method that may work for me can work for someone else at an even better clip. So anyway, that's crude. and this is the past. And you know, I'm not going to jump on it if I think, even though I think, you know, it could be putting in some type of low here. I know there are a lot of long-term, well, not a lot, but there are crude bears that think the peak that oil, the cycle for oil has peaked on this particular time. And, you know, now it's going to be kind of range bound. I have a little different view because I do a lot of intelligence gathering from people who I respect their work, and that came to the conclusion that we could pull all the way back to here and this still be a wave 4. And if that's a correct Elliott wave interpretation of this being 4, you don't know if 4 is over, but that would imply that this was some type of, you know, ABC, and that we have another high coming in crude. So we'll see. No new positions for me on this. Like I said, when I show you some of the shorter term stuff, you know, I think we're going to have to do some work. Look at these RSI readings. You know, we're going to have to probe lows and test resistance, and be patient and tactical, and look for shorter term, maybe intraday to 2-day type of 3-day moves. So here's a couple I'm looking at. It was interesting on Friday that when the market was selling off, the euro had a bid, and actually was higher with everything lower. So I mean, a little bit unusual. And this is why I didn't want to, even though we didn't turn last week, I said, you know, I'm not going to get short euro down here. So you know, gutted it out. Good day Friday, pulling back here. I still think that we could have another push up towards 1370 or so, or in the next few days. And I'd look to buy this break with stops under the low, and take some profits at 80, 81 and see what happens there. Because I think there's one more pop that's going to come in this euro, at least here. I don't know if this, you know, if you're highly leveraged, if this is, you know, a great place to own the euro. But if you're not leveraged, I think you'll look back at, you know, 112 euro, maybe by, you know, middle of the year, end of the year, next year, and it'll look like a great price. But does that mean this is a bottom? No. You know, I still am basing the bottom in the euro based upon this call in the dollar that we're going to go to 97.5. Just to refresh your memory, it was based upon this formation here, 400, tests a breakout, measures 97.5. So I don't think we're done. But tactically, I see, you know, just like I see a trade to the upside in euro, I think we could get one more push down in the dollar, that this is just rallying back into resistance and look great, and that we could trade back down towards this 95.40 level before the dollar reasserts itself to the upside, and that push towards 97.50, 98 happens. So I think there's one little counter trend trade setting up here. Looking at Canada, pretty tough to trade. Still looks okay. You know, you had confirmed highs up here. I'm not going to fade that one. Aussie's at major support, new lows. I think we'll have some divergence here. We are sitting at this major support level. You have an inside day in Aussie as a scalper. I might take a shot at new lows for the move, looking for an outside day to the upside tomorrow, a little turnaround Tuesday scalp. Aussie's been, the commodity currencies have been even weaker than euro. I do believe that we're going to see lower levels in the Aussie, that there could be one more little, you know, brief rally with this pullback in the dollar that I see coming. But I think we're going to see a sub 70 Aussie dollar, 66. And then if you go back to the COVID crash and where we peaked, I believe 66 is close to 61.8 back. So that'll be a long-term buy, just like, I'm thinking this is going to be a major top in the dollar. All right. We've been grinding all year, and that we're in some kind of transition phase. And, now it makes sense to turn into a dollar bear. It didn't at 89 or 90 or 92. And then you couldn't fight it after we had a couple of breakouts here. This really being the breakout and, double bottom. But now, if I think this was the major wave in force and that we're just correcting the COVID decline and, we can't get back up here to where the COVID decline is, I'm looking for this to be an important sell zone that we could end up having a move like this from 98. Okay. So that looks to be, could be one of the trades of the year. Just something I'm looking at, that the dollar could be a sacrificial lamb to keep the economy going, maybe make it easier for us to export, or perhaps it just turns into a confidence crisis. So this is the big picture. In the meantime, looking to buy this break in euro here and sell this rally in the dollar, not too far above where we are now, and then just look for one more jiggle, and then perhaps we're back with a major trend. Talked about the gold negating its breakout last week. If you took it seriously, you got out of the way at 1827. During the panic Friday, gold attempted a rally, didn't do much. And if I'm not bullish, I'm not long, but if I was looking for a rationalization to stay long, I think I could maybe use this trend line and see what gold does at 1770. I am noticing potential scalping opportunity that could be setting up in the silver. I think it was a 2-hour. Yeah, well, we might be starting to diverge, and gold, same type of situation at new lows. So, if the dollar comes off a little bit, you could get a rally in gold, maybe back to where it failed, but it's going to take closes back over 1830 to convince me that I'll trade the long side, but that the gold bull market is back on. I actually have a contrarian view, and that's even though I'm looking for a dollar sell-off, is that we could trade down to, I have a few things lining up at the same price level at 1565. So I don't know what kind of environment that's probably going to mean that yields are heading up. So gold couldn't make much headway. It didn't get killed, but it didn't make much headway. Still negative gold. Considering some kind of counter trend trade, maybe we get back to 1820. But once we take out this trend line, I don't know how people are going to rationalize it. You know how many sell stops must be under these lows here? Okay, so we haven't taken out a prior low in gold yet. That's what the bulls are probably hanging their hat on. But I'd say there's a couple sell stops here, and here's the grand prize, where, most gold bulls will throw in the towel. And then maybe we're $100 away. So that's my big picture, and those for Pinkert take on the gold market. I'm not in a big hurry to do anything here in silver. To me, I pointed this out. This head and shoulders breakout was a fake out. So, I don't see anything I want to do right away here. I mean, there are some shorter term divergences setting up, like maybe this will be some type of 3 drive right here that we're getting in silver, and we could get a bounce, but it doesn't feel like it's time for me to make long-term commitments there. Yen really got killed. It was like 200 points, and it's trying to recover. To me, the big area in the yen is going to be right here. We didn't quite get there here. This is going to be very important for the yen to hold 112.50. If it can do that, because it's an important sign for where yields are going. So if the case for higher yields is still intact, I'd expect the yen to dig its heels in somewhere around here and then make another surge for one more high, above this recent high and in the 116 range. But right now, just like some of the other markets that are in shock, I want more price action before I, think about it. Although a test at 12.5, if I get some divergences in RSI, isn't a bad place to try it. I mean, where you're going to be wrong if we close under there. So if you get a dip to this area, you put on a small long position, give it some tolerance, and then if it starts closing, say using a 1 or 2 hour, 4-hour candle underneath the breakout, then it's negated. But we could end up with a successful test because we never got there, and then having one more rally, which would imply, yields came off dramatically during the fear, and TLT's given a lot of it back. 10 years getting some of it back. Again, one of these large candles, an auto rack candle, one of the biggest ranges here in TLT too. I mean, in the 10-year. So, I mean, is it possible if we get another bout of risk off? And I may as well start talking about the indexes. But last week, I was talking about a 5% correction from the highs against the highs, and and a pullback to prior highs, which is here. So I didn't think it would happen in a day, and I don't think it would. That we're just going to go straight to new highs from here, and I'm not sure if we're going to break down from here. We didn't quite accomplish these levels. That's 45.45, and the low going home was 45.81. So there's another 40. I think that the S&P is actually, may take out the prior high by a little bit. But when you look at NASDAQ, it's at 16.2 right here. And it was weaker on this day than the S&Ps. No, the S&Ps were weaker than the NAS that day. But the NAS still didn't come close to its prior high, which is 15.7. And, from where it's at right now, 16.2, NAS could drop another 400 or 500 points back to this prior high or this moving average before attempting another rally. Closes under the prior highs, especially NASDAQ, might seal the deal. But I'm still thinking there's another rally in yields, which implies growth. And, maybe this is going to turn out to be just for now. Well, we'll receive information that, we don't have to take it too dramatically. I don't know if we're going to, there won't be a need for lockdowns, but, that could change too. We could get some reports that Halcyon, Omicron, it may be contagious, and there are some reports that it doesn't cause severe disease, and I've seen reports that it does. So, it's going to be that kind of cycle. And then people may also say, well, maybe this gives Powell, take some heat off Powell, to, be macho and double up the taper because of this uncertainty, which, still leaves favorable monetary conditions for another run in the stock market. So let's see what happens here with NASDAQ. We could still pull back to here. One thing you can say about this down day that we had and pretty good down week, and just getting back to the NASDAQ on this day, this key reversal day, you don't see many of them. I don't see any of them here, here, nothing, no key reversals. But this day, should have significance for at least a pull back to prior highs. Okay, so anything else we want to touch on? I think a lot of people are disappointed that bought the Russell breakout. I don't see a breakout anymore. Do you? We're underneath the breakout. So, the Russell has to have a, another wave in it. Also, this high here on the weekly, look at this RSI reading. I would love all these indices to, do a little work here for a few weeks and blow off into early next year. We'll see. Looking at the shares, the gold shares, they had a pretty negative day because, gold wasn't up much and stocks were down. At times, miners get treated like stocks. So these are still in pullback phases, but you know what? They look better than the metal. I'll be talking about this with Michael tomorrow, except for Yamana, looks like it could wash out. And Newmont is no longer best of breed. It looks like it wants new lows. SLIJ, I wouldn't buy this yet. So we may have some interesting long opportunities in the next month or so in the miners. I'll be following them. And what we'd like you to do is follow us and follow us into our main chat room at TradeGate Hub and collaborate with us. Don't isolate. Surround yourself with traders better than you. It works. Be part of a community. Exchange ideas. The ideas that you'll be exchanging will most likely be your best work, and it makes you accountable. That's why we do it. The review that I just did right here for you guys, it not only helped you, it helped me, help crystallize and reinforce ideas that I have to execute instead of analyzing on the fly. This analysis was not, just for the public. This is for me. So let me ask you guys, any questions that you would like to ask me, guys, either in YouTube or in the main chat at tradegatehub.com? Okay, so remember the saying of the day, to be there for the good times, you have to be there all the time. Not your physical presence, but a position expressing your view of the market. So don't just count your pips, count your blessings. I'll be back with Mike tomorrow. Last week I talked with Mike and said, what would you be buying if we got a 5% correction? So it's going to be an interesting discussion with Mike Venezia tomorrow. So join us. So adios, everyone. Good hunting the rest of the day. And Mike and I will be with you tomorrow, 10 a.m. Eastern time. Adios.